Okay, team, today we have Oracle earnings. We'll see how these affect AI. This is what I'm really curious about, is to see how these affect the AI stocks that we got going on right now. Oracle pump it up, though. It's at, let me see what it's at right now. Oracle at 117s currently, just about 117s. Let me get this rolling here. Get some music. Let me know if you can hear the music. You should be able to, but let me know if you can. And I debated on whether I should even stream Oracle earnings. Apparently, this is ranking higher today. It's not the biggest earnings report, but there's a lot of stuff going on with it right now. So, biggest. So yeah, we'll see how it goes. Hey, what's up, Shadow, Biggie, Michael, Alex, Stewart? No, so TK says, am I the only one watching? No, I mean, you can see, like, it says we have one person watching, but we actually have a lot of people here. You can see them chatting right now, so it's just a little slow in updating. Market ended up bouncing back nicely today. There we go. All right, guys, so yeah, today, again, we are in Oracle right now. SPY is pumping up to 430s. Apple up to 183s right now, so the whole market's looking lovely today. Hey, thank you, Sam. Boeing. Hey, what's up, Biggie, Stewart, Shadow? Why will this pump AI? Well, that's what the type is that everybody's talking about AI. Not the AI stock, just the AI sector as a whole. So Oracle has an AI service that is pre-built. It's called a digital assistant. People also use the Oracle infrastructure to build AI systems, so they're all related today. And this will be interesting to see what happens here. We're gonna do a poll like we always do. Hey, what's up, Tobias? We're gonna do a poll right now. Does Oracle come in? Does Oracle beat, miss, or come in as expected? Beat. We're gonna give you guys options here. Miss. Y'all hear the music as expected. There we go. It's ORCL. It's right here. It's at 117.13s right now. You can see it on the top left screen here. We'll put this up so you can see it a little bit better. We got Apple, the SPY. Tech is moving up really nicely today. This is good. I mean, I'm green on the day and everything, so that's nice. But man, look at the micro NASDAQ, man. The NASDAQ has just been surging up. Look at this run the NASDAQ has had today. Wow. Huge pump up ahead of CPI tomorrow. Look at that run for the NASDAQ here. That's a pretty big run, man. Let's not even lie. It's ORCL, Stewart. It's ORCL. Man, Oracle about to break highs right now. Lovely. Man, my dip buys have been on point, dude. They've been working really nicely here today. Walgreens. We're green on that one today, too. Disney, we're green. JP Morgan, we're green. Oracle, we're green. KO, we're a little bit red, but that's all right. It's going really well, Mike. We bought it this morning. Our average price on Oracle currently is 114s. And it is at 117s now, so we're doing pretty good there. And again, looking at the votes, 43% think they're going to miss, 29% as expected, 29% think they're going to beat. So interesting. Can y'all hear the music? Quick question. Can you guys hear the music at home? Can you hear the music? Let me know. Yes. Okay, good. We're just going to keep these on then. All right. If Oracle beats, do you think it'll pump sound? If it's AI related, potentially. Yeah. I mean, it might not. We don't know. We're just speculating here, but I think it's possible that it does. All right, so we Oracle up to 117s. Again, SPY still ripping up here. Maybe we'll look at a little pullback in futures here. We got a nice green day in futures, and we do have a pretty big extended little dip here. Remember, the new symbol is NQU3. Market's just surging up a lot. The question is, how does Oracle affect the market? How does it affect AI? How does it affect everything is the real question here. And I don't know. I don't know how it's going to affect everything. But that's the real question. Yeah, all good, fireworks. Music's going to put you to sleep. Oh, you'll be all right. Man, I got so many windows right now. Let's see what the market does. Yeah, so we are getting some dips back down a little bit. Let's see if this can push up towards highs here. I think it's got a chance to. Oracle still at 117s, over 117s now. SPY pulling back a little bit. We might buy this dip here. We just got 15 shares. Let's see if we can scalp this little thing real quick. I'm trying to be patient and wait. Oracle right now, we'll put the expected numbers up here so you guys can see kind of what's going down here. Oracle is expected to show up. It's the only earnings report today. It is expected to show up at 158 EPS on 13.72 billion in sales. Let me know if you guys think it'll hit it or beat it. Again, 158 on 13.72 billion. This number up on screen. 158. And we'll look at the EPS graph. All right, so again, 13.72, 13.72. Pretty sure I got this right. Let me make sure. All right, so yeah, EPS 158, 1372. Yep, that's right. All right, we bought the SPY a little bit. We're going to buy a little bit more. We'll take 30 shares, maybe get up to 60 real quick. All right, so we got a little bit of a pop here. Oracle still pushing up to test that high up there at 117s. Let's see if the market starts to bounce a little bit more. Oracle's still up there, so it's still trying to break these highs. Thoughts on Wheeler and AMC? What do you mean? How's AMC doing despite all this? I know GameStop earnings. AMC is basically just so sideways now, man. It just doesn't really move that much. GameStop's still pumping up. It's at 24s. Right now, we bought the dip of the SPY. That's turning out okay. We'll cover that. the Donald Duck song. This Donald Duck song is horrible. It really is horrible. That Donald Duck song is terrible. All right, so we're scalping some more in the market here. We've been kind of scalping all day. We are up about 250 on the day so far. Market's just volatile right now. SPY at 433. Earnings, the earnings call is at 5 p.m. So the earnings call is at 5 p.m. So we still got, an hour and a half until that thing starts. But the actual earnings report goes live in about 35 minutes. Yeah, good luck, Sam. Good luck with that, dude. All right, guys. So, yeah, Oracle still pushing up, testing highs here. We'll see if it drags the rest of the market back up. Still got a little bit of time. We bought the SPY dip. We took a little bit off here. We still got a couple shares left. We're going to see if this works for us. Currently working on scalping another move from the NASDAQ. There we go. All right, so yeah, this is our P&L today. We're basically using our cushion to take some bigger risk trades on the combine. You kind of see us going back and forth. We are up about 300, almost exactly. Y'all good, Sam? I think we're going to pause. I really don't know whether we're going to pause, skip, or what we're going to do in that regard. I really don't know. I think there's a chance we do either one. It's not like all right, so we're going to do a poll here for Oracle. All right, so we're going to do a poll, beat, miss. So it looks like most of the people voting. All right, guys. You can see we did buy up a trade here. We're going to go and take some more off here because we can. Lock some more in. Cover a little bit more. Caught the Apple bounce here. We did get a market bounce too, as we projected we might. Also, do me a favor, bump the like button if you can. Again, this stream, I'm hoping we get a lot of people because of AI hype, but it really is something that I haven't been scalping the market momentum, but it's been volatile, man. Good. This is good for me and Oracle. We've already taken most off of our SPY trade. We could probably let that one run. Again, the market closes in about 30 minutes. Do me a favor. It helps Twitter engagement if you just vote on this poll real quick right here. Vote on this poll. Yeah, I bought it this morning. What do you think of Pfizer? Hi. Please include. I have no clue. Yeah, I mean, that's genuinely an option. I think we're going to pause. Okay, so let me go back to that question. Sorry, I was kind of doing something else. It's highly probable that we pause. So it's highly likely that we pause. Now, it's not a for sure thing, but it's pretty close to 1. Generally, like I think right now it's about 75-25. So it's pretty probable, but of course, there's still that 25% chance that they don't pause and that they raise rates. Inflation matters here. And I think inflation has gotten better. And so I think the Fed might be a little bit more brazen in terms of potentially raising rates relative to, being risk averse. But overall, I think they probably pause. I think they're going to call it a skip. I think that's the most likely outcome. But of course, we really don't know. But I think it's likely. It's likely. Will they? I don't know, but it's likely. Pfizer overbought. Well, Pfizer's up a lot. What is Pfizer? It's PFE, right? Yeah. So fiber is up a lot over the last 5 years. Down a lot the last year or so. So I don't know if you consider it overbought. I mean, if you look at a long-term chart for Pfizer, it's been dropping basically from 50s down to 30s for the last couple of years, since the beginning of 2023 and early 2022 or late 2022. But it's really been on a downtrend if you look at a longer term chart since late 21. So downtrend's been obvious there. Now, whether I think it's overbought, it depends on what the PE ratio is. We'll have to check it. But yeah, I don't know if I would consider it yet overbought. I don't know if I'd consider it that. Again, what's the PE ratio? Let's check it out. All right, we got 12 votes. 83% think they're going to beat for Oracle. 83% think they're going to beat. 17% think they're going to miss. None think they're going to come in as expected. As for Pfizer here, in terms of like whether, in terms of what you think they're going to do, Pfizer's PE ratio is very low at like 7.6. Now it's a pharmaceutical bio company. Now, those are a little bit more conventionally volatile, if that makes sense. But the PE ratio is very low. Do they pay a dividend? Do they pay a divvy out for Pfizer? I don't think they do. All right, guys. Oracle down to 117s here. We got the SPY at 433s. Pfizer at 3980s here, 3980s. Oracle finally pulling back, still at 117. I think 117 will probably be a support level right there, right? No divvy, nothing to actual gain. Well, no, the reason I'm saying that, Liam, is because sometimes like heavy dividend paying stocks are going to have a lower PE ratio to compensate for the dividend that they're paying out. So it's a little bit different. They're going to, they're bringing in less money relative to their earnings because of the dividend they're paying. So sometimes they're going to have a lower ratio. So it's actually, I think, a stronger sign for Pfizer if they have a low PE and they don't pay out a dividend. But yeah, we'll see. I'm curious to see what happens here. So again, Oracle drops Q4 numbers here. Again, they're expected to show at 158 on 13.72 billion. Yeah, I don't know, Ken. I really don't know if it's going to be a good dip buy or not. What I will say is that it's a pretty well-known company that's down pretty big over the last year. Do they pay a dividend? Yeah, they do. They pay a 41-cent dividend quarterly. It's about $1.60 something per year in EPS. SPY at 430s. Again, let's watch this level here for Oracle. Man, my stomach is in knots today, guys. Just knotted up today. Not feeling great. All right, guys. So So here's a daily chart, man. I'm looking at a daily chart for Target. It's just down big. 5 day, 1 month, 1 week, 1 quarter, 1 year, 1 minute. There we go. There's a 1 minute chart. All right, guys. Oracle at 117. Let's see if that 117 hold level is there. All right. SPY. Let's watch this 433 level on the SPY too. I'm going to put just 2 charts. Here's Oracle on the left. If we look at what AI did today, AI is starting to rebound back up too. NVDA has been on a tear, man. Look at NVIDIA fly right now, guys. So there's Oracle. Here's NVIDIA. NVIDIA going up to 394.40s, 394.50s here. So just a big increase in value here. Chart management. I want a 200 EMA. All right, so again, Target pulling back to a level that looks interesting too. And again, we're in Target right now. So we bought Target this morning. I think that's probably a nice little dip that we can capitalize on. Coca-Cola pulling back. Yeah, we're still green on the day. Again, luckily we are in the SPY right now, I think still. And look at that NVIDIA rip here today, guys. So I'm going to go ahead and take a little bit more off of our SPY dip buy that we bought. If you saw that earlier. Just going to lock in a little bit more. Take that off. Lock that price in. Ginger ale might help. Yeah, man, I've been nauseous, dude. Pfizer pays 4.2 billion. Unity, yeah, Unity's an interesting one to watch. I mean, we can keep an eye on it. Again, Oracle up there to 117s. David, I've never seen you before, man. But what are you talking about? My trading model. Bull div on ES Delta. I'm also about target today, but went with more with Amazon. Yeah, Amazon's interesting. It's just the PE ratio is so high. You know, that's the only problem is the PE ratio is high. Amazon at 126.50, so big green day for that one too. But man, look at NVIDIA's tear here. NVIDIA's just on a huge run here, just a big pop. Again, we got a decent amount of votes on Twitter. 73% of people think they're going to beat Oracle specifically. Q4 earnings, think they're going to beat. 16.7 think 17%, basically 17% think they're going to miss. 73% think they're going to beat, and 10% think they're going to come in as expected. Today is Salesforce AI Day. Who knew, man? I never knew that. I didn't know this today was Salesforce AI. Oh, damn, dude. What is 12:30? Oh, wait. So apparently Salesforce AI Day is supposed to be right now at 1:30. Oh, never mind. So this is already over with. Oh, that's cool. Yeah, now we got Oracle earnings coming up. 395s for NVIDIA, man. Look at NVIDIA's tear back up here. NVIDIA might test 400 sometime soon. We'll see if it does. But it might. Yeah, CPI tomorrow. Amazon's price to earnings ratio is not properly indicative of what I could truly bring in it if I wanted to. It's because they spend so much on upgrades and expansion. 100%. I absolutely agree there. CPI tomorrow. I think CPI is interesting to watch, but I really don't know what we're going to show for it. I think they're expecting a pretty big decline. And last time I thought they might be a little bit too optimistic, but then we did better than expected last time for CPI as well. So I think it's going to be interesting. We're going to be streaming the full thing live like we always do. I'm not sure what we're going to show for it, of course, but we'll see. I'm curious. Have to spend money to grow. Yeah, absolutely agree. And I think Amazon's doing it right, to be honest, as well. So remember, Oracle numbers are scheduled to drop right at 4:05 p.m. We had some other earnings today, but nothing really big. We had Red Hill, Streamline Health, Zedge, Optical Cable Corporation, eCar. But man, look at NVIDIA pop here, guys. 395s right now for NVIDIA. Dude, Gran Turismo's got a movie coming out. What? I used to love Gran Turismo, dude. They used to have all the cool old cars. Like they had Integras, they had Acura NSXs. Like they just had all the cool cars. That's cool. I'm gonna have to check it out. It's got what's his face from Stranger Things. Again, 117, a big level for Oracle here. Big level for Oracle. 117. We got NVIDIA pulling back to 394s here. 394s. Hey, nice, Liam. Cool, man. Tesla rip it up. Yeah, let's check Tesla out too. Tesla moving up, but not as steep as NVIDIA, man. And NVIDIA is really tearing up. Yeah, AI. Yeah, AI is still red on the day. I mean, it's not super red. It's above the previous closing price, so technically it's green, but it's relative to the opening price. Like relative to open, it's still slightly red, but not by much. Again, y'all do me a favor, hit that like button, guys. Bump those like numbers up if you haven't already. All right, guys. Big pullback for NVIDIA, though. Big pullback here. Should I buy this dip? Part of me wants to. All right, we're at 15 shares of NVIDIA here. It's a pretty large pullback over the last couple minutes here. So we're going to see if we get a little increase leading into the close. We still got 15 minutes before the close. And I think Oracle earnings are 5 minutes after the bell anyway. So why do I have a feeling all the gains will be wiped out? Yeah, I don't know. Am I still in my SPY trade? Good, I am. No. I cut it. Okay, I'm out of it. All right, slight greed here. Again, I like the dip. It's small. All right, so we got 30 shares here. We'll take profit if we pop up to like 394s. Tesla's still trying to hold, but it's just not doing that great. And again, Oracle, we are in Oracle. Let's pull it back to the 200 EMA. I wonder if that's a big enough level to justify holding. All right, so we're in this. I could probably buy a little bit more of NVIDIA too. All right, we're in 45 shares here. All right, so we got a little bit of a green here. I could probably take off a third of the position if we get enough gains. I like the bounce. Go ahead and lock in a little bit more and then let the rest ride. All right, guys. Hey, we still got a couple minutes before the numbers drop. 4:05 is when the Oracle numbers are scheduled here. 4:05. I feel like Oracle will beat and still drop. A lot of stuff has had earnings beat and still missed, you know, so like it's possible. A lot of stuff is beat and still missed and not done that hot. So like it's certainly possible that it doesn't do great. But it's also possible that it just flies up too. And that's what I'm hoping for. Again, I'm in Oracle. I got in pretty early though. I'm in at like the 114s for it. But like part of me wants to stay in it just in case it does some crazy parabolic move based off of earnings. Like some of the other AI plays have shown that they have the capabilities, you know, of, and again, I'm not sure if we're going to get that or not, but I'm hoping we do. You can kind of see we got into a couple trades. We bought the SPY dip. We made money there. We bought the NVIDIA dip. We're green on this so far. And I like the dip level. We've already taken most of our profit, but like at this point, we can get into a nice little spot where if it really breaks down on us, we can get out pretty close to break even. Again, Oracle, we're still sitting in this one, and we'll probably keep sitting in it. I mean, we can. I got to let that one try to work for their earnings. The only thing that matters to spending has to go up. Otherwise, NVIDIA's lying about earnings. Not really. I don't necessarily agree with that. All right, guys, we're going to do a question here. A question. Do you think in 1 month, NVIDIA stays over 392? Or let me see. In 1 month, in the next month, does NVIDIA close over 400? I think it's a real genuine question. In a month, is NVIDIA over $400? Or NVIDIA priced? Genuine question. I don't know. In 30 days, will NVIDIA be priced over $400? Let me know. We got a nice little pop back up here for NVIDIA. And then a quick little rejection. No, nope, nope, yes. Do you think Oracle would beat and still end up dropping? No, not necessarily. I don't know. I think it could. I really don't know what Oracle's going to do. I think anything's possible. I mean, it could. Doesn't mean it will. So we got some yeses. Hassan says yes. Fireworks says yes. Omar says no. Liam says no. Daniel says no. Michael says, do you think Oracle would beat and still end up dropping? I don't know. 2 AI conferences this week. Yeah, they had the Salesforce conference just now. So the Salesforce conference was over the last couple hours. NVIDIA not looking like it wants to hold here. Jack says no. All right, guys, we still got 10 minutes until the closing bell, and we got longer than that before the actual earnings call. There's another one on Wednesday and one on Friday. Yeah, I mean, the Wednesday one I would cover, but Wednesday's going to be such a busy day here. So, like, Wednesday's going to be such a busy day that, like, it's just not going to be worth it to, like, dedicate stream time to an AI conference Wednesday. Wednesday, we have PPI in the morning and then the rate hike decision in the evening, or in the afternoon, I should say. And so it's just not worth it to try to stream on Wednesday. All right, so we bought it and scalped it and then cut it again. We're still pretty flat here, just playing around on this one. I can let the rest work. Again, the real time is going to be telling in about 9 minutes. All right, so look at Oracle popping all the way back up to 116. So we can look at the graphs here for Oracle. Let's look at the EPS graph of Oracle over the last couple quarters, if not the last year here. All right, so here's Oracle, right? If you look at their EPS graph, here's the real strength. Yearly, they're doing okay. Quarterly, though, they're trending down relative to what they were trending in, like, let's get this out the way. All right, so growth, you can see quarterly growth here. They're not growing as much as they were, but I think we might see a push in this. The question is, how much does AI benefit? How much does AI benefit Oracle is the question. You know, like, will this increase? Again, they're expecting much higher quarterly EPS. Again, you can see 158 EPS. The last time they expected anything close to that was early 2021 in February. Early 2021 in February, they showed 168. That was the last one that was anywhere higher than that. Aside from that, if we come in at 158 today for their EPS, that will be the most successful. They're the second most successful EPS report quarterly that they've ever had. It'd be the second best. The last best was, again, early February of 2021. And so that looks pretty good here. We'll see if that continues. We can also look at Oracle revenue. So EPS is profitability. Revenue is like what the ceiling is, basically. You know, how much they can ultimately potentially make here. Look at Oracle dip pretty heavily down here under the VWAP. Here's the 200 EMA and the volume weighted average price. Oracle dipping pretty heavily down there here. If we look at their revenue is consistently been shown stronger and stronger here, with their last revenue report coming in at 12.39 billion quarterly, which was their highest ever. And the yearly 12-month revenue came in at almost 48 billion here. So they're showing really good revenue growth over the last, couple years. So again, we'll see what happens here. Their revenue today, they were expecting 13.72. And so if we do show 13.72, that will be the highest quarterly revenue they've ever shown for a company here. And so again, we'll see if we come in there. Again, I'm not saying we will. These are all just expectations. We don't really know what we're going to get here in that regard. These are all just expectations. But again, it's possible. It's possible they do something nice. Look at this pop. We're going to take a little bit more off of NVIDIA just because we're already, green, and we might as well take it here for NVIDIA. And again, we still got about 5 minutes. We got about 10 minutes or so until the actual earnings release here. You guys ready for a market pump? Good luck. Good afternoon. Great stream. I don't always chat, but I enjoy your content. Hey, thank you, Larkin. I appreciate you, man. Good question regarding NVIDIA. If they lower the price of the graphics card to be competitive, otherwise, I'm not sure. Yeah. Again, I'm not sure either, man. It says, is anyone buying Oracle calls today? I'm in Oracle. I'm not buying call options. I'm just buying. I just have shares. You guys ready for a market pump tomorrow for CPI? Yeah. I mean, we'll see. I hope it does pump. I mean, we'll see. You know, a lot of people are expecting a pulse. I think a pulse is pretty likely. Doesn't mean we're actually going to hit it, but a pause is pretty likely. So we'll see if we show up anything. What's up, Daily? What's up, Daily Grind? What's up, man? All right. And again, Oracle is expected to drop theirs right at 4:05 p.m. Just took a little bit more profit in NVIDIA because I can. Just going to go ahead and cut this here. I mean, we made our money with it. Pretty good day all around of just overall trading here. Oracle, we're still doing nicely. We're sitting tight in this one. It is dipping under the VWAP some, but MVIS. Yeah, market ripped up today, financial. MVIS dipping down a little bit, man. But I'm old enough to remember the MVIS crazy hype that they got a couple years ago, man. Like when GameStop and AMC and all that craziness started to happen, MVIS was like a meme stock, man. Everybody talked about it. Everybody said it was going to hit like $100 and all this crazy stuff. You know, they super sensationalized it. They talked about how it was the greatest ever and about how it was going to do all this crazy stuff. And then basically, since 2021, it has dropped from $30 down to $6. So, yeah, I mean, I'm not super. And they've also split, I believe, as well. So, again, I just don't know about MVIS. I heard it pumped too much. ZDGE as Zedge is dropping their earnings today, I believe, as well, right? But it's just such a low float penny stock that I might not be interested in taking that one. Again, NVIDIA is still surging up here. Am I still in NVIDIA? I think I cut it. It's okay. We made enough on that dip buy. Man, AMC stock is looking rough, dude. It just doesn't move at all. GameStop's still looking strong, though. I'm surprised at how strong GameStop looks. What other big earnings reports do we have here? This is kind of a rarity. I mean, I don't usually cover this one, but... All right, guys. Hey, we got 2 minutes until the closing bell and then a little bit more than that before the actual earnings drop. Again, we're at 394s right now for NVIDIA 394s. The SEC Stabilization Act, Warren Davidson said. All right, guys, look at, again, so we are popping back up here ahead of this. Oracle up to 116.40s. NVIDIA still testing 394s. Tesla up to 250s here. I'm going to put the Q up. I'm going to put the Q up here because the Q is really what's rising. It's tech. There goes Oracle pop up even more here. NVIDIA surging up. So tech is really running right now. Oracle still popping up. Pepsi still looking good. GameStop still surging up. So yeah, they did something called the, I don't know what that act really does, but it's up there. All right, guys, a couple seconds before the market closes. And then we still got about 5 minutes before Oracle is set to release here. I'm going to put just 2 charts up. Look at NVIDIA surge here still. Oracle still surging up right now. AMD running, man. AMD's up so much already, man. I'm just skeptical to buy it. I'm for Oracle. So there's the closing bell, guys. There is the market close. So this is a closing bell. We still got a couple minutes here before this is actually set to release, though. All right, so the U.S. senators are proposing a $107 billion 5-year Federal Aviation Administration reauthorization bill, which is going to require the FAA to increase runway safety, track high-altitude balloons, and prohibit family seating fees. All right, so the Pentagon spokesperson Kirby says that the bilateral relationship between U.S. and China is tense right now. All right, again, still kind of sitting back waiting here. If you guys could do me a favor, hit the like button, hit the notification bell. We appreciate it. All right, I'm also going to throw it in sub-only mode, so if you can take the time, hit the subscribe button, guys. We appreciate it. All right, so yeah, the call is at 5 p.m. Eastern Standard Time. All right, there goes Oracle's popping up a little bit. It's at 117s, 117.80s. Let's see if the earnings are actually out from this. This is a great sign so far. Waiting for the actual earnings. Man, look at Oracle. It gapped up a nice amount. It doesn't. Usually earnings are going to cause a little bit larger of a flush or a bounce here. So patiently waiting. But so far, it looks great. So we got a little bit of a bump here. Again, the actual numbers are set to drop right at 4:05 p.m. So right at 4:05 market time. Yeah, I'm long on Oracle currently. But to be honest, I bought it early this morning at 114s, and I took most profit off of it already. So we are in it, but pretty safe in it, despite what happens. All right, again, we also in the sub-only mode, so if you haven't already, hit the sub button, hit the notification bell. We appreciate it. Oracle consolidating here. The numbers are actually set to drop in about 2 minutes. Now, sometimes these tech stocks are actually kind of late with their numbers, at least from what I've seen. People are mad at Gary Gensler. What do you guys think about that? You can still bounce it up a little bit. I don't know if this is just sympathy or hype for their earnings for Oracle, but nothing dropped yet. Still waiting here. Still got a couple minutes. And NVIDIA slowed down a little bit after the closing bell. Here's the Q. So tech's still pretty bullish here for tech, man. Look at this, up to 360, almost 361s. All right, so look at the fluctuation in price here. So I don't know if the numbers are out, but they're supposed to drop sometime in the next 20 seconds, and this might be it. So look at the 117.50s fluctuation for Oracle. They might not be out. This might just be a little bit of a prelim move, a little bit of a pre-release move in terms of like reactions. But it's at 117.50 right now. The Q is still at 360s. Yeah, I don't know, Jake. I hope it goes up. I'm in it right now. All right, look, this is the earnings. So they are released right now. It's at 116.50s here, 116.50s for Oracle. Big pop, big move, all the way down to 115s, 114s here. So luckily I took some of my profit. We'll give it some time though. All right, so here they go. Oracle numbers are out. They showed 119 EPS. Adjusted EPS is 167. So 119 EPS, adjusted EPS is 167 for Oracle. 167 EPS on 13.84 billion. So by all intents and purposes, it did much better than expected here. Much better than expected. Let's see what the rest of the numbers show here, but it's still moving up. I'm still in my position. Huge pop up to 120s. All right, so we just took a little bit more off on that big pop, and we'll hold some more. Not a bad day, but yeah, we're gonna see if it continues going up. It's at 118s right now. Good little trade from this morning though, not bad. Let's see if it consolidates over 118. 118 seems like a pretty big level to watch. Hey, thank you. Yeah, I bought it at like 114s. We sold it at like 120 just now. I mean, we're still holding, but you know, we got at 114s this morning. And the reason I bought it, I'm usually not like a dip buyer, but I think Oracle, you know, like I'm such a big dip buyer. Anytime I see a dip in stocks, I'm kind of programmed to want to buy them up, you know? So like what I really bought Oracle on was not like any earnings hype, but I bought Oracle in pre-market today because of this pullback here. So like we had this little pullback. The pullback just looked so good. So we're going to put the data up here. Let's put the data up on screen so you guys can see it. But yeah, 167 EPS versus on 13.84 billion in sales. So better than expected. We'll put this data up on screen right here. But yeah, here's the data. But yeah, we bought it based off of this pullback here. So like if you look at this pullback, pullback was pretty favorable here. Look at wow, look at Oracle rip all the way back down to 115s. But the pullback we wanted to buy it on was this. So like we saw it go like this, you know, after it had broken up highs. And so like the dip buyer in me was like, okay, well, let me scoop up some down here at around 114. And we did. And then we just kind of let it work heading into the earnings and then just cut it just now at about 120s. So dip it down a little bit, but that's okay. Yeah, 116s. Q trying to hold. Big pull on Oracle. Yeah, this is toss. Good numbers though. Let's see if they showed any guidance here. So again, we got the numbers out for fourth quarter fiscal 23. Cerner contributed 1.5 billion to total revenue. We'll put this data up on screen. So we'll continue to put this data up on screen. And again, we'll put it up on the chat too. Nice, Chaz. Again, if you haven't already, guys, check out TopStep. TopStep is a funded program for futures. They give you a demo, and if you can hit the target on the demo, you know, and pass their testing, then they fund you, right? And it's just a good way if you don't have that much capital. When I first got started, I lost thousands and thousands of dollars, and I wish I had something like this when I was day trading, because day trading futures is very similar to day trading stocks. There's just no red tape. So you can day trade the S&P in what's called the E-mini. You can day trade the NASDAQ. You can day trade currencies. If you like Forex, you can day trade gold and silver. And the patterns, the strategies, they move with economic data. It's all very similar, but there's no red tape. There's no PDT restriction. And they allow these funded account programs. And TopStep is the most legit. It's been around for over 10 years. They pay out millions of dollars to their proprietary traders every year. They fund thousands of traders a year. And regardless of whether you get funded or not, it genuinely builds your skill. It teaches you how to trade. It teaches you how to follow rules. They have funding coaches, all that good stuff. You get to keep up to $10,000 of your first profits as well. So like your first withdrawal, you get to keep 10K basically. There's just a lot of reasons to try them out. It builds your skill, great community. And, you know, they are a sponsor of mine, but it's super cheap. The base package is like 130 something if you use my link. So just very, very cheap. If you want to check it out, again, link is in chat right there. Great way to help support the channel. I don't know, man. Oracle's PE ratio, like if we're digging through the PE ratios here in terms of like extension, you know, I hear people talk about stocks being extended on the upside or downside. Looking at, hold on, let me report this. Oracle has the highest performance, lowest cost GPU cluster tech in the world, they said, and this is all quoting them. So we're quoting them right now. They say Oracle has the highest performance, lowest cost GPU cluster in the world. NVIDIA themselves are using our clusters, including one with more than 4,000 GPUs for their AI infrastructure. All right, so you can see their quotes here. We're going to keep reading this here, guys, because we're reading from them. We're going to put the rest of the data up in chat here, team. So they said, without impact of U.S. dollar strengthening compared to foreign currencies. We'll put the rest up. Oh, if I was them, I would be spamming AI too, to be honest. That's why I streamed them. I've tried streaming Oracle before, and we didn't really have that good of results. But like with the AI hype, you know what I mean? Yeah, I figured it might be worth a shot. And we got a couple hundred people here. It's all good. Tomorrow's the real big day, to be honest. PE ratio is not terrible for Oracle. I wouldn't call it like an elite PE ratio, but it's at 30s. 30s is good right now, man. And look at it pump. So look at Oracle at 120s right now. But 36 PE ratio is not terrible right now. When AMD's got, what, 500 plus. Amazon has almost 300 PE ratio. There's some worse PE ratios out there than 36. So Oracle, in an age where tech is booming, you know, I think it's worth watching. I think it's worth looking at. Again, that's why I bought it this morning. I think there's an argument for it. I think with AI on the move, with all the AI hype, Oracle has been taking advantage of the AI hype, of course. You look at a yearly chart, it's a very strong yearly candidate as well. Look at the yearly chart on Oracle, man. This thing has been flying over the last year. That's just a huge move here. So, I mean, hey, listen, people can say what they want, but I think it's worth watching. I really do. I think it's worth watching. Yeah, if I was them, I'd be AI, AI systems. You know, Oracle AI. All right, so we're at 116s now. Q is at 360s. I guess the question is, do you guys want me to stream the call? Y'all want me to stream the call? I can. Yeah, I mean, I can stream the call if you guys want me to. Again, we're breaking highs right now for Oracle, up to 122s. It's not within Top Steps trading hours, I'm pretty sure. Where can I purchase AI internet node? I mean, Google that stuff, bro. AMD going to 160 by the end of this month, maybe, man. I watch all your lives for earnings, mostly for the calls. Hey, thank you, Jake. I appreciate it. All right, I got you guys. We'll stick around. Yes, please. I can't register for some reason. All good, dude. I got you. We'll stream it. Just stick around. Hit the like button. Do me a favor. Hit the like button. Subscribe if you haven't yet. I appreciate it. And we'll stream it. Again, Oracle's still breaking highs, guys. Up to 122.30s, 122.50. Q is getting dragged up from this, and this is all great here. Hey, I'll take it. Dip buys by John. I'm up 288. Hey, man, I'm telling you. My dip buy system, I mean, people can hate, but anybody that actually watches it, they know. Like, people can say whatever they want. They can make all these crazy strategies and patterns, but, like, just waiting for big pullbacks in healthy companies. Easiest money you can make. Just looking for blue chip healthy companies to pull back on you know, what my sweet spot is really, like, when I'm buying these dips here. Like, when I'm buying these dips, my sweet spot is looking for stocks that are pulling back over, like, I would say over like an 8-week period. If a stock is falling for 8 weeks and the last couple days have been really, really red, it's time to buy it up for me usually. As long as it's a blue chip healthy, you know, company. So, I mean, we're going to keep doing it. Having a hard time getting in after buying the dip of 2022. What'd you buy the dip in 2022, though? Depends on what it was. I think there was options. But again, 2022, you had to be a little bit more rigid with what you buy, a little bit more strict. You couldn't just kind of throw your money at anything. You had to just wait for big pullbacks. Yeah, we had some guy today talking about Roblox, about how his friend said Roblox was going to hit $100 this today or this week or something, and I was just kind of like, I wouldn't bet money on that. Is Tesla popping? Let's see. So again, we do have a pullback now in Oracle. Here's Tesla. Tesla at 250s right now, over 250s. Big milestone level for Tesla too, with all the crazy hype and bullish action here. Look at 250. So we're over 250 now. Let's watch that support level right here. Big level, 250 psychological support level. Yeah, look at the bounce. So again, let's see if it holds, but you can kind of see the down wick here, the pullback to the 250. I bought up a little target today, Lurkin Luke. And I know I'm gonna get some hate for it because Target's just, the cool thing to hate nowadays. But like, bro, okay. The reason I'm buying Target is because despite any socio-political, economic whatever going on, Target, picture the thought experiment I always do with blue chips to determine whether I want to buy a pullback is this, right? Imagine you didn't hear about politics. Is Target going to be around in 5 or 10 years? And of course it is. It's Target, they're everywhere. They're very popular. They make a lot of money. Their margins have got to be really good because they basically provide the same stuff as Walmart, but it's way more expensive at Target. And so their margins have got to be good. Their EPS ratio currently is very low. And I think it's a long-term healthy company that's going to be fine despite any current trend negatively. And so if you look at Target's daily chart, they have dropped a lot. A lot, basically since the beginning of May. And listen, I don't let any, opinion on anything influence what I buy. If something looks cheap, I buy it. And I bought Target today. And we'll see if it works. Again, I might be wrong here. Maybe it just crashes. But I bought the dip. We'll see if it works. Again, let's see if Oracle holds at 120s right now. Well, it's an emotional drop, though, Jake. Yeah, I don't care about any of that stuff either, Joe. Again, the people, I get people that come to my stream and sometimes they like specific stocks and sometimes they dislike specific stocks. And that's all good and fine and everything like that. I don't let any of that stuff influence whether I buy something. I just look at whether something's viable long-term. Target looks cheap. It's down a lot. It makes a lot of money. The margins are good. The PE ratio is low. You could also consider this an emotional move. And so that's even more of a reason to potentially for me to buy it because a lot of the time emotional moves go down and then they go right back up. The PE ratio is 20 right now for Target, very low price versus earnings. So they're making money, and yeah, I'm going to buy that. Again, maybe I'm wrong. I don't know. We'll see what happens with it, but yeah, we'll see. So man, did Bittrex really go out of business, the crypto firm? All right, so bouncing a little bit. Let's watch 120 here for Oracle. Let's watch 120s. 120s is right there. Yeah, technically good dip, fundamentally I think as well, but yeah, for sure. I mean, we can look at Disney. Like again, it mirrors Disney. Right, it really does. Okay, like how many times have you want to see how much I bought Disney, bro, in the last couple, few years? It mirrors the Disney trade. Again, people can say whatever they want. But like you can kind of see my Disney trade here and like see like I don't worry about that stuff a ton. You know what I mean? Like here's my Disney chart. So like I play Disney a lot because again, Disney is the same thing where it's like people underestimate them because of political reasons. And that gives me some opportunity of value. Like Disney right now, every time Disney dips, it's very consistent. Every time Disney dips to like, I would give it like every time Disney dips to $85 to $90, it bounces back up. Almost every single time. Last time it ran to 120s, we rode off into the sunset after that. And so, and again, it's not political. Again, for me, it's not political at all. Again, I'm very neutral politically. I'm very middle road. I believe you should be able to do whatever you want to do as long as it's not hurting anybody else. And so I'm very neutral politically. So none of this has anything to do with politics. Um, Thing is, in this market, you're betting off buying momentum. You might have to sit 2 months through chop. I could have added to my winners that are moving up a lot. Yeah, I mean, I think that's arguable. Um, I I think that it depends on how you look at the trade. Again, most of the time, I'm buying blue chip healthy companies, so I'm buying long term plays. And so, regardless of any pullback it does short term, I understand that. Like, look, I can sit on this thing for years if I need to make my money back. If I'm like if I really need to, I can sit on it for years, and it might take me months, if not longer, to get my money back. But I have that patience, and I have a large enough account, and I'm buying up stocks that are going to go up long term. So short term, I might get a bad entry or we might get a continuation in something, but like long term, these stocks are going to be fine and they're going to keep going up. And so if I could just have patience with a lot of these, like Disney's going to go up long term, Google going to go up long term. There's just a lot of examples of this. And so if you could play those specifically, I think you have a huge advantage and a huge edge over anything else, especially penny stocks or mid caps. Yeah, so CPI tomorrow is an interesting one because a lot of people are expecting a pretty low expectation. I think JP Morgan is expecting 4.2%, which is actually very low, but it's on the higher end of the rest of the analysts here. So again, JP Morgan expecting 4.2%, which is on the higher end of all the rest of the analysts relative to the other ones. The rest of them are not expecting super high numbers here. So then the rest of them are expecting anywhere between 4.1 and 3.9%. But I do trust JP a little bit more. And so I'm gonna be cautious tomorrow for CPI. I think there's a chance that CPI comes in hot. I don't think we've had that many hot CPI reports lately. I think most of the time they've come in under expectations, and that's been good and fine and good for inflation and all that. But for whatever reason, I just got a hunch that we're going to come in higher than expected tomorrow. And then we're going to be even a more tricky slope where inflation's bad. What does the Fed want to do the following day? Because remember, tomorrow is CPI report, which is huge. It's one of the biggest streams we ever do. Wednesday, we have what's called PPI. So it's the other side of the inflationary token in terms of CPI gauging consumer prices. So CPI is like inflation for consumers. PPI is the other side of that inflationary token, which is for producers or sellers, right? So PPI is for sellers. CPI is for buyers. So Wednesday morning, so CPI tomorrow morning, Wednesday morning, we get PPI. Wednesday afternoon, we get the Fed rate hike decision at 2 p.m. and then the accompanying press conference at 2:30. Thursday, we get jobless claims, retail sales, and a lot of other stuff going on. So those are big reports, big numbers, and that'll be really interesting to see what we get for all of these here. They're just big numbers here. They're big reports. Again, ORCL at 120 right now, so trying to get back over that 120. Again, watch 120. I think it's a psychological level that's important to pay attention to. Yeah, we'll see. I hope we come in good. I hope we come in good. I don't know. All right, guys. And again, if you want to check out a pretty cool resource that I'm using here, like this is actually really, really nice, dude. If you guys look at this, this is actually really, really nice. It's called Chart Prime. It's a trading view indicator service that you can use in stocks, crypto, Forex, futures. The new one is incredibly powerful here. So again, you can use them on any time frame. This is a 5-minute time frame, but you can use them on a daily time frame. Like, look at this buy signal. So like, look at the last couple signals from the NASDAQ. So you can see the last couple signals from the NASDAQ here. Hold on one second. So yeah, you can see the last couple signals. So here's the NASDAQ right here, right? Look at this buy signal. So Chart Prime is a trading view indicator service that gives you custom indicators, custom signals, custom alerts here. I like putting up where you get most of these. So you get the regular market Oracle, and then you get also the market Oracle Pro. But like, look at this here. So it's actually really impressive because here's the buy signal here, right? You got the buy signal there. And then look at the huge price action. So this is all day price action. Again, same thing with the S&P 500. Buy signal here, you get a huge move. And you can use it in stocks, crypto, forex, future. Look, strong drop, drop. Strong bounce, bounce. Strong bounce here, bounce. Strong drop here, drop. Buy signal here, bounce. I look like John Madden, but again, it's just really powerful and it's super cheap. It's 35. I think it's like 35 bucks a month. I can use this on stocks, crypto, forex, futures. I can use it on Apple right now. So if you like Apple, for instance, or Oracle, let's look at Oracle. Now I think earnings are going to influence this one a little bit more. Here's Oracle right here. Here's a 5-minute chart too. But like you could use Chart Prime on anything you want. And it can be incredibly useful. It really can. It can be super useful. Let's let it load. And so again, this is pretty good. Look at the opening bell, guys. So like look at pre-market today. So like look at pre-market. Look at right at the opening bell, it gave you this buy signal here. And then look at the huge bounce you get on a 5-minute chart. You can also look at a longer term chart as well. And you can look at like a daily chart. Or I like you looking at an hourly chart, to be honest. Hourly charts are kind of my favorite. Because, or they're one of my favorites, I should say. Because hourly charts, each candlestick represents an hour. And like, look at this. You can look at it. And you can genuinely see nice signals here in reversals. Like, look at the last two. Again, look at the last couple. Honestly, we can look through and test all of them if you really want. But, like, look at the last couple here. So, like, look. Buy signal here. And this is every candlestick represents an hour. So, this is days of green action. Days of green action from this. Strong sell signal here. Nice drops leading up to it. Buy signal here. You get days of bounces. Sell signal here. You get drops. Buy signal here. You get bounces. And so, again, very profitable if you use it right. I can't guarantee you're going to make money. Nobody can. They are a sponsor of mine, so I'm certainly biased in their favor. But it's 35 bucks a month, and you can use them on stocks, crypto, forex, futures. You can just use them on a lot of different things. And again, at checkout, it'll give it to you for 35 bucks a month. So check out the link right there. Again, I'm biased in their favor, guys, because they pay me money. They're a sponsor of mine. But again, to put it into perspective, I was never really about getting sponsored by some of these companies at first, right? I was really skeptical at first. I didn't really want to get sponsored by them until Chart Prime sent me their software and I actually looked at it and I actually kind of started testing it and it impressed me. And so that's the only reason I'm sponsored by them is because I was actually genuinely impressed by their software. And I thought it was cheap too. So it's like, it's just kind of custom VWAPs. You can't guarantee you're going to make money or anything like that, but I think it certainly helps. And so check them out. I thought that was Aleister Crowley that did the Do As Ye Wilt, but maybe I'm wrong. Yeah, I mean, technicals don't mean anything with fundamentals. Again, something I always tell people is like technicals are good, but if a fundamental story comes out, technicals mean nothing. You know, and I've had some crazy people over the years in the stream that have just kind of argued about completely ridiculous stuff. Like I had somebody argue about fundamentals, and I was like, hey, if you could have the best technical pattern in the world drop at 8:30 on CPI day, and it doesn't mean anything. It could be the biggest bear signal ever. It could be the greatest bear signal in the world, the best triangle formation or whatever you want to call it technically in the world right at a specific level on the downside. It could be the best bear signal ever, right? But if CPI comes in really, really low, the market's going up despite whatever technical pattern there is. And so fundamentals always trump technicals. It's a very self-evident thing. The more you zoom in, the more technicals matter, unless there's a fundamental catalyst that kind of trumps it. So, cup and handle on AMD. Yeah, AMD's kind of crazy right now. I'm long on the NQ. Yeah, I made some good money on Top Step. And again, another one of my sponsors is called Top Step. They're pretty cool, man. Like, if you check them out, again, Top Step just builds your skill. So what they do is they give you a demo and they test you. And if you can hit the target while following their rules, they fund you between 50K up to 150K with a 90% split. This is my dad. Here, hold on. Hey, man, I'm streaming right now. I'm on stream. Here, hold on.
All right, bye.
All right, Dad, bye. But yeah, we're doing pretty good today. But yeah, Top Step, they give you a demo, they test your skill. Genuinely useful because it really does build your skill. People underestimate it. Like, all I could really go by in terms of tutorials or in terms of testimonials is like my first month of trading. And so I'll go ahead and tell you the founder story of how I founded beginner trading. So in 2016 or 17, I watched the Big Short movie. We went and saw it like a while before that. When I first got started trading, we went and saw the Big Short in theaters in like 2016. And I loved it. I was a big strategy player, so like I love strategy games. I love poker. I love chess and checkers. I'm like a big strategy person. And so we went and saw The Big Short, and I realized that you could kind of do the same thing, but in the stock market, and you could make money doing it. So I wanted to learn about trading, and so I kind of Googled, day trading or whatever, and I got Tim Sykes and look at me, millionaire students, all that nonsense. But I wanted to learn, and so I put up like $3,000 or $4,000 at the time, which was a lot of money to me. It was like a lot of money. I had made it selling books, and I ended up losing that 4K within like a couple weeks, and I was distraught. I almost cried. I remember I almost cried. I was like super disappointed, and that's my point. Is that like most day traders are gonna lose. And so like if you're learning in the beginning, stop trying to copy your gurus. Like trade small, take a funded account program, test your skill. If you're good enough, you can get funded, and then you can take the profits from funding and go do other stuff. If you're not good enough to get funded, you lose more if you put the money up yourself anyway. So you're saving money all the way around. And like people have to look at these funded account programs the right way. Like that's why they're useful, is because they'll save you from losing more. Most people are going to fail these, just like most day traders lose money. But the ratio isn't bad. Like, again, the base package, they give you a 50K demo, and you got to make 3K on that 50K demo without losing 2K. So it's a 2-to-3 ratio, not a bad, unreasonable ratio. If you can do that, I think there's 2 phases. You pass both phases, they fund you 50K with a 90% split. So once you're funded, you make 20K, you keep 18. All right, so it's a reasonable thing. Most people are going to fail that, though, because most traders lose, but that's the point, is that it's so much cheaper to lose Top Step. I'm green. Yeah, I remember U-Stock Trade, man. U-Stock Trade was fun. It was $1 commissions, bro. So it was $1 commissions on U-Stock Trade, which was like amazing at the time. Like $1 commissions back in the day, that was like a thing. A lot of y'all are too young to remember before the zero commission days, right? Like I used to day trade on TOS. It cost me for one round trip. I could buy one share of Apple. I could buy one share and sell one share, and it cost me $14 for that round trip. It was absolutely ridiculous. So U-Stock Trade, I remember I used U-Stock Trade. U-Stock Trade actually grew my channel, because when I first started streaming, when I first started the channel, I made some U-Stock Trade tutorials because they were $1 a trade. You could only go long, but like it was like a good thing. And then basically PFOF came, payment for order flow, and that just fundamentally changed trading as a whole. Made it a lot easier to day trade. Made it a lot cheaper to day trade, made it a lot easier to day trade small accounts. You could just lose with a paper account. It's free. Yeah, but I mean, the whole point is like it's a combine. It's a challenge. You could use paper, but you have no pressure to succeed. So you're not really going to learn anything because there's no pressure there. The whole benefit of Top Step is that you have pressure to succeed. You have different profit levels that you had. It teaches you how to follow rules. It teaches you how to trade under pressure. And they also have funding coaches and like a lot of other stuff. DOS paper trading costs like $100 or $100 and something bucks a month if you sign up to DOS paper. Right. So like you're paying basically the same you would for like a high quality paper account anyway. And so why not have the potential to get funded while you do it? And it teaches you how to trade under pressure. Again, people can dislike them. I get it, but I think they're obvious. For new traders, I think it's an obvious thing that you should do. Is this an all-time high for Oracle? Yeah, so Oracle right now, the all-time high for it is, yeah. So the new all-time high for Oracle is 122.55 currently, which we're still pretty far away from that. Again, watch the 120 level. The 120 level is big. So if CPI comes in high, will the market have a small pullback? I don't know. CPI is one of those ones that, especially lately, you don't really know the reaction. CPI is a little bit more literal of a reaction, where you get high CPI, the market drops. You get low CPI, the market generally goes up. But PPI is a weird one. Like PPI, a lot of the time will come in under expectations and the market dips. So PPI is less given in terms of reaction. Yeah, so we're watching Oracle again. It's over 120 here. Tesla's still trying to hold. It's still trying to pull back. It's at 250 right now. All right, so watch 120. Yet our swing trades are still doing pretty well too. I'm still in Disney, but part of me feels bad because I'm nervous about CPI coming in bad. But one of the things I did lately, and it's turned out really, really nice, is I started to okay, so you guys know my strategy of buying dips, right? Blue chips. I look for blue chips that are healthy, that are obviously blue chips. And again, the real understanding that you need to have with this is that don't call a mid cap a blue chip. When I say blue chip, I'm talking about actual, very well-known large cap companies. I'm not talking about Mullen. I'm not talking about Peloton. I'm talking about actual blue chip companies. A lot of the time, traders who are really emotional about their positions treat certain mid caps like they're blue chips, and they're just not. You got chances to make money, and I've said this many times before, with mid caps, like smaller mid cap stocks, but you could also lose 70% in a year. You could lose 80% in a year. You could lose more than that. And so if you're taking my dip buy strategy, and again, I don't want anybody to copy me. I'm not liable if you lose money. You always got to make your own assessment, trade responsibly. But you got to do it with well-known companies, because those you're able to hold truly long-term and be okay. You can hold Disney for 5 years and it's probably going to go up. You can hold Apple for 5 years and it's probably going to go up. You can't hold Peloton for 5 years and have it probably go up. In fact, it's actually the opposite in terms of reactions there. But yeah, when I buy stuff, one of the things I started to do was I started to diversify a lot more. I started to buy a lot more dips. And so instead of just buying one swing trade at a time, one position at a time in one specific stock, I started to buy multiple. And it actually turned out really nice, because what happened is that, some of these stocks, I'm in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 stocks. Today I was in 14 different stocks. It's nice because it's diversified. So it's some of them might trend, badly on any given day, but all of these, almost for the most part, I am green in all of them except for 4 out of 14 total positions. And so it really diversifies and allows me to have a little bit easier time making money on my swing trades lately, at least. About puts for tomorrow. I'm almost always bullish, but this is the first time for me in a while. Hey, good luck, Saul. I would say I hope you make money, but I don't know if I do. Oracle should target 121 by the end of this cup and handle, maybe. So not all of them. Well, yeah. All of them is an expression, I'm pretty sure. Still in Walgreens. Part of me doesn't know what to do with Walgreens. I'm already up a lot. I've already taken profit there. Is Walgreens, I don't know, you guys might know better than I do. Is Walgreens super affected by CPI? It's still on a really nice downward trend, and I bought it at 29.80s, which is right around the lows of the year. But I've already scaled out of most of it now. And so I'm torn on whether I should take profit there. Disney, kind of the same thing. My average is 87.50s, and it's at 93 right now. So I think I'll go ahead and take a little bit off here, a little bit more off at least. Just lock that in. Walgreens too, I think I'll do the same thing. I'm already up a lot. Kind of lower my risk a little bit ahead of this stuff. Oracle did really nicely. What else am I in? Still in Still in Target. Again, I'm going to give Target a chance. All right, guys, we got 20 minutes. Oh, I'm the top 3 most expression traders in the world right now. Keep Disney, sell Walgreens. Yeah. Apple very strong today, guys. Apple all the way up to 194s. Look at Apple. There's Tesla. Here's Apple here. So Apple very strong. At 184s now. How long to the call? We got about 15 minutes. What do you think of crypto right now with a lot of coins being delisted? I think there's risk there, man. I think the crypto market's kind of crazy right now. I think there's risk. You know, I made a bunch when crypto ran in the 2010s, but right now I think the crypto landscape, there's less easy gains and there's more risk. So I think people just need to be careful with the SEC targeting them. I think people just got to be careful with it. Yeah, I mean, AI is the biggest thing that could influence crypto positively, I think, and it's definitely helping the stock market. I might bail on Apple. Those sunglasses aren't going to bring money. Yeah, I mean, I think the price is a little steep for VR. You know, I think it's not the first time a company has tried to do that. I do think that the design's pretty dope. I do think I do think the design's pretty cool. I think okay. I think you got to understand it like this, right? I think this is how you have to understand it. I think you got to look at the competitors, right? And like, what are Apple's competitors here? Apple's competitors are Oculus, right? Those are the biggest VR providers in the world. And so in that regard, what is Oculus? Oculus looks really heavy, looks really thick, throws your balance off a ton. And they're just kind of oddly shaped. They're hard to wear. They give you headaches. If Apple could solve a lot of those problems, if Apple can essentially feel light on your head, I think that's going to make a lot of people buy it. Now, is it going to be enough to justify the price point? I don't know. I think that's a different question completely. But yeah, I think they're interesting. I think you also gesture them with your hands, which is a little bit different than like holding up something. So like, you know what's crazy though, man, is that like 10 to 15 years ago, there's a lot of like stuff like this in science fiction. And it's I don't know whether science fiction accurately predicts what technology is going to be like, or whether technology takes inspiration from science fiction. I don't know which one it is. And I think both of them are plausible, but we're kind of at that age now where we have stuff like this. And again, a lot of this stuff was predicted 10, 15, 20, 30 years ago. So what do you guys think? Hey, what's up, William? Yeah, everything's all good, man. Yeah. Apple will improve the Pro over time and reduce price? Maybe. I mean, we'll see. I mean, I know it's certainly possible. Apple was a headache to trade on Friday, was moving like a snail, only pumps when retailers. Yeah, Apple breaking high. Speaking of Apple, it's at 184s right now. We still got 15 minutes. until the actual report here. But yeah, Apple's still moving. Didn't Back to the Futures predict the Cubs winning? Yeah, but eventually that's gonna happen. It was predicted in the Terminator movies for sure. It was predicted in a lot of stuff. Yeah, market's ripping up, and again, we'll see what happens. We'll see what happens in terms of CPI tomorrow. That's the big thing here. I'm gonna go ahead and end this poll and do another poll here. We got about 400 votes. Let's do another poll. Is the CPI coming higher or lower than expected tomorrow? All right, so we got a poll right now. The CPI coming higher or lower than expected? Man, Oracle's been pretty flat. It's been at this 120 level for a while. Back to the Future also predicted casino biff. Hope we get a nice pullback on market. Maybe rage. We'll see, dude. I'm just gonna keep accumulating crypto like I did in 2019. Hey, good luck, dude. Alien UFO vehicle stored by USA said. What? Johnny 5. Now I'm just confusing. A lot of predictions are in comic books and movies. Yeah, I mean, again, I think it could be either. I think maybe movies and pop culture predicted technology, or maybe technology got inspiration from movies. I think they're either one is possible. And I think it's probably a little bit of both, to be honest. Like, you can't tell me the Cybertruck wasn't taken from a sci-fi movie, inspired by a sci-fi movie vehicle. Somebody said, somebody gave an example of one earlier. Yeah, last time was 4.9% for yearly CPI. Let me turn this off, see what my battery is like. Oh, I got these headphones still on. Turn these things off. Hey, thank you, Bernardo. Hey, I appreciate you, brother. Thank you, man. Shout out to Bernardo with the donation, brother. Thank you, man. Shout out to you, bro. Hey, thank you, man. Hope you're didn't you have the kid in college playing softball, man? I hope they're doing great, bro. I hope they're doing great. Yeah, Total Recall. Yeah. Bro, I honestly, Jay Thomas, I know exactly what you're talking about. You had to put the weights on the bottom of them. That was the rules in Boy Scouts. I was at Boy Scouts, bro. You had to put the weights on the trucks, the fishing weights. Then they had to weigh a specific price, and then you rolled them down the ramp. And you had to figure out the one that was the most aerodynamic under the same weights. I remember doing that. I'm confident no highs over the 52-year high with SoFi. I predict self-driving cars that return themselves in 8 years. Hey, man, we'll see. If they monotone wildly, not mentioning AI, please keep the music. Nah, we're gonna turn the music off, bro. SQ all the way up to almost 70 here, man. There's another one that I bought the dip on. I should have held. All right, guys, 10 minutes here. Team, 10 minutes. Team. So. All right, we are at 120. Looking at our poll numbers here, I will put up the actual results for Oracle. Again, Oracle did really well. They said their Gen 2 cloud has quickly become the #1 choice for running generative AI workloads, according to Larry Ellison in Oracle earnings statement. I'll put all these up in the comments so people can see. Yeah, so we're putting all this stuff up on our Twitter page. Follow me on Twitter at Beginner Trades. So if you haven't already, give your boy a follow here. We post all this stuff right here. I believe we have a pullback to 429 with CPI data, then go higher on Wednesday. Yeah, well, Wednesday is the rate hike decision, so that might have a little bit more influence over markets. But CPI tomorrow will be big. Apple finally pulled it back. Again, Oracle's still over 120s. We got 9 minutes. All right, so yeah, we have mute this for a second, and then we're gonna get ready to pull this up. There we go. All right, guys. Hey, John. Hope you're well. I'm really struggling with risk management. Have you any tips? I'm on step 2. I keep trading minis. I mean, what I would, again, I don't know what you should do there. What I would do is trade small until you build up a cushion, and then once you have a cushion, give yourself a maximum size with that cushion, but take larger risk. So like you build up a cushion of $200, maybe if I'm trading regular micros, like, or if I'm trading the regular E-mini, for instance, as an example, say I trade up to 5 contracts of micros to build up a cushion of $200. Once I have a cushion of $200, then I'm allowed to trade up to 2 contracts of the regular E-mini, but maybe just 1 contract of the regular E-mini. Then if I build up a cushion of $500, then I can trade up to 2 contracts, so forth and so on. That way it's scaling and you're protecting your account with risk management while you do it. That's what I would do. But again, everybody's different. What's SoFi been doing? I haven't even seen SoFi lately. SoFi at 920s. All right, guys, we got the earnings call pretty soon. Full call starts. We get the full call starting in less than 7 minutes, about 6 minutes now. We got the call on hold waiting here. All right, guys. Again, what's your predictions for this year? Let me look at the poll. I did a poll. 48% think we're going to come in higher than expected for CPI. 30% think we're going to come in lower than expected. And 22% think we're going to come in as expected here. SoFi. Yeah, SoFi. I mean, it's been on a big run, but that doesn't excuse the huge drop it's made over the last few years. Now, this year it's actually up a lot. So SoFi's been ripping mostly on AI hype. A lot of the AI hype started in May. And that's starting to really run with NVDA and AI and Oracle. Yeah, for sure. Yeah, SoFi's been running. But the big support level on the chart is like $15. $15 is like a big longer term support level, and it's a psychological level too. So SoFi's range isn't the biggest, but we'll see if it hits that level sometime. 4.3% CPI, so the market will have a small pullback. Yeah, maybe. I'm not sure. We'll see. Yeah, but they got rid of the daily drawdown. And it's not the $1,000 daily max loss is not trailing. So the $1,000 daily max loss is not trailing, right? So on the combine, for instance, you could build up a cushion of $1,000, and that would give your daily drawdown target $2,000 for your daily drawdown. Now, I think the main one, which is like 30, what is it, like 3,500 or something? Maybe it's less. Maybe it's 2,000. Now that one stays intact, but the whole point is to use it to get funded. But you build up a cushion, and then you'll have much more room to do it. But again, like your trading shouldn't be swinging that much. If that makes sense, like your trading shouldn't be swinging so much to where. All right, guys. So again, we have about 3 minutes left. 3 minutes left. We'll see if we get anything good today. I'm hoping we do. Up to 120s now. Still holding over that level. Leads, man. I remember Leads, dude. Leads is an old school stock. I don't know. It depends, Bobby. I'm a little bit better at like the 50K one because I'm just a small trader. Like I don't trade super large. I don't like trading super large. It might be worse for promotion and worse for like everything else. But again, the reason I trade small is because my TOS account's got 50K in it, right? So it's like I'm used to trading my actual account over like a combine, and so it's a very hard transition for me because people are like, "Oh man, John can't even pass a combine." It's like, well, not really. Like you got to understand me as a streamer. Like number one, my TOS account's got 50K in it, and so it's a really hard transition to go from trading what I consider reasonable size in my account that's going to protect it, where I'm happy if I make a couple hundred a day, to having to push and try to make 500 plus a day in the combine. It's a really hard pivot or switch, and so in that regard, the 50K combine's a much better suit for me. It's also like I stream all morning, so we kind of have the early stream. So we start the stream super early, and then we keep streaming all the way up until 9 something a.m. But by the time the bell rings, we've been streaming for 3.5 hours, and so I'm tired by the time the bell rings. Like, so it's just the 50K combine's much better. CPI is the Consumer Price Index. It's one of the biggest economic releases we get on any given month. It happens once a month. It's inflation data. So in a period of inflation fears and woes and economic, inflation fears, the inflation report, which is tomorrow at 8:30, is going to be highly influential over stock price, market price, sentiment, traders, sentiment and all that stuff. And again, it drops tomorrow at 8:30, and it will move the market a lot. It comes out right at 8:30 on the dot. So it will move the market too. All right, guys, I'm going to pause the music or turn the music off. Y'all can hear the music though, correct? And I'm going to go ahead and mute the music for a second here and get this ready so you can watch the full release. And we're still waiting. The report should start anytime now, but yeah, we're just kind of waiting for the release. It should be going live pretty soon. Put that up. We'll put this here. Get ready. Yeah, so we had rollover. All right, Bobby. Sounds good, man. All right, guys. Again, data should be dropping pretty soon. All right, look at Oracle Pump. Again, I'm in the call right now. They haven't started it yet. I'm waiting for it to start. I'm gonna refresh it just to make sure. Yeah. All right. So yeah, we're in it. Just hasn't started yet. Waiting for it to start right now. All right. So again, AI starting or Oracle still moving. Again, they're a little bit late on the report. It should start sometime soon, but we're still waiting for the report to drop here. So patience here, team. Waiting. All right, here we go.
And welcome to the Oracle fourth quarter and fiscal year
Sound
2023
check.
earnings call.
We should
Today's
be good
call
with
is being recorded. I would now like to turn the conference over to Ken Bond. Please go ahead.
Thank you, Lisa. Good afternoon, everyone, and welcome to Oracle's fourth quarter and fiscal year 2023 earnings conference call. A copy of the press release and financial tables, which includes a GAAP to non-GAAP reconciliation and other supplemental financial information, can be viewed and downloaded from our investor relations website. Additionally, a list of many customers who purchased Oracle Cloud Services or went live on Oracle Cloud recently will be available from our investor relations website. On the call today are Chairman and Chief Technology Officer Larry Ellison and Chief Executive Officer Safra Catz. As a reminder, today's discussion will include forward-looking statements, including predictions, expectations, estimates, or other information that might cause actual results to differ from what we're talking about today. Throughout today's discussion, we will present some important factors relating to our business, which may potentially affect these forward-looking statements. These forward-looking statements are also subject to risks and uncertainties that may cause actual results to differ materially from statements being made today. As a result, we caution you against placing undue reliance on these forward-looking statements, and we encourage you to review our most recent reports, including our 10-K and our 10-Q, and any applicable amendments for a complete discussion of these factors and other risks that may affect our future results or the market price of our stock. And finally, we are not obligating ourselves to revise our results or these forward-looking statements in light of new information or future events. Before taking questions, we'll begin with a few prepared remarks. And with that, I'd like to turn the call over to Safra.
Thanks, Ken, and good afternoon, everyone. As you can see, Q4 was another fantastic quarter and the end of a great year. But before I get to the numbers, I'd like to go over our journey to get here. 3 years ago, I shared with you that our own business transformation had reached a crossover point as our fast-growing businesses had eclipsed the size of our declining businesses. And as a result, this would inevitably drive revenue growth acceleration going forward. Now, I don't blame you for not believing me at the time. Fiscal year 2020 growth was 0. Well, as you can see, this has played out with organic revenue growth accelerating significantly, and that's despite the closure of our nearly $500 million Russia business. Since fiscal year 2020, our strategic back office SaaS business has more than doubled in size, and consumption of our Gen 2 cloud infrastructure service is now 7 times larger. And while competitors have seen their growth rates drop precipitously over the last year, our cloud infrastructure growth rate has essentially doubled from last year to 77% this quarter, and with Gen 2 OCI growth even higher. And we're far from done. In fact, I just told my team, I think we're at about the middle of the beginning. Looking ahead, I see even more growth opportunities that should help power future growth acceleration in the future. We remain committed to the fiscal year 2026 targets that we shared with you last fall at our financial analyst meeting, and our exploding AI demand leaves us significant upside. Our momentum has been driven by two fundamental differences from our competition. One, highly differentiated technology, and two, a much better customer experience. Firstly, our cloud applications are very popular with a growing base of customers, in part because we are the most modern, comprehensive, and innovative set of apps across back office, CX, and industry applications. We implemented AI machine learning capabilities years before anyone was talking about it, and it helps our customers run their businesses every day. To complete the picture, we can serve customers of any size around the world, from small businesses on NetSuite to global enterprise on Fusion in all industries. Having the best cloud application technology has helped us grow the business to $11 billion in SaaS revenue while expanding gross margins. On the infrastructure side, we're seeing more and more media articles reporting on the unique capabilities of OCI and our database technologies. Larry will explain our unique differentiation in a moment, but the result is that customers are choosing to run on Oracle infrastructure for all their requirements, be they new services like AI training or services we're known for, like database and Java. To complement the technology, we've changed our culture such that we are totally focused on our customers' success. That partnership spirit starts with engineering as we work hand in hand with companies as they try out our technology, and continues all the way through their success with us. There's no question that this close partnership with our customers has led to our success. As part of that, we've also created an organization called Customer Success Services, or CSS. This group ensures that customers get the most value from their Oracle purchases, from planning to activation to implementation to support to anything else they need to succeed. We think this unique approach, which customers already tell us they love, ultimately drives overall customer satisfaction, and that results in higher renewal rates, expansion rates, and referencing. Now, I'll turn to Q4. As always, I'll discuss financials using constant currency growth rates, and also provide a full picture. I'm going to share with you results, including and some excluding Cerner, so that you have it all. Total cloud revenues, SaaS plus IaaS, was $4.4 billion, up 55%, with IaaS revenue of $1.4 billion, up 77%, and SaaS revenue of $3 billion, up 47%. Excluding Cerner, total cloud revenue, SaaS plus IaaS, was up more than 33% at $3.8 billion. Total cloud services and license support revenue for the quarter was $9.4 billion, up 25%, driven again by our strategic cloud applications, autonomous database, and our Gen 2 OCI. Application subscription revenues, which include product support, were $4.4 billion, up 37%. Application-specific revenues, including support, but excluding Cerner, were $3.4 billion, up 11%. SaaS cloud revenue, again, excluding Cerner, was $2.4 billion, was up 17%. Our strategic back office SaaS applications now have an annualized revenue of $6.6 billion and grew 24%, including Fusion ERP up 28% and NetSuite ERP up 24%. Together, our strategic back office businesses are now larger and have grown faster than our local competitor for 4 straight years. Infrastructure subscription revenues, which also includes support, were $5 billion, up 15%. As mentioned already, infrastructure cloud services revenue was up 77%. Excluding legacy hosting services, infrastructure cloud services revenue grew 89%, with an annualized revenue of $5.2 billion. Including OCI consumption revenue, which was up 112%, cloud at customer consumption revenue was up 60%, and autonomous database was up 47%. Database subscription revenues, which include database support, were up 6%, highlighted by cloud database services, which were up 41%. As on-premise databases migrate to the cloud and cloud and customer, we expect these cloud database services will be a third leg of revenue growth and revenue growth acceleration alongside back office SaaS and Gen 2 OCI cloud services. Software license revenues were $2.2 billion, down 14%, following the 25% growth we saw a year ago in Q4. So all in, total revenues for the quarter, including Cerner's revenue contribution of $1.5 billion, were $13.8 billion, up 18%. Shifting to margins, the gross margin percentage for cloud services and license support was 78% as a result of the mix between support and cloud. Last year, Oracle license support revenues with its mid-90s gross margins represented about 62% of cloud services and license support revenue, and now it's down to 53%. But this is happening because our cloud services are growing much, much faster than license support, even as license support continues to grow. Most importantly, gross profit dollars of cloud services and license support grew 19% with Cerner, 10% excluding Cerner in Q4. Additionally, I would note that IS gross margins improved substantially from last year, and I expect IS gross margins will continue to improve. While we have continued to build data center capacity, we've also seen our margins go higher as these new cloud regions fill up. Non-GAAP operating income was $6.2 billion, up 12% from last year. The operating margin was 44% as we continued to integrate Cerner. As we drive Cerner profitability to Oracle standards and continue to benefit from economies of scale in the cloud, we will not only continue to grow operating income, but we will also grow the operating margin percentages. The non-GAAP tax rate for the quarter was 9.2%, and the non-GAAP EPS was $1.47 in US dollars, up 8% in USD, 10% in constant currency. The GAAP EPS was $1.19. For the full fiscal year, total company revenue was $50 billion, up 22%, and excluding revenue, total revenue grew 7%. Total application subscriptions grew 35% and 10% excluding Cerner, compared to 8% last year, and total infrastructure grew 10% compared with 5% growth last year. Clearly, our revenue growth continued to accelerate again this year as investments into our cloud businesses are paying off. Total cloud services and license support revenue was $35.3 billion, up 21%. Total cloud services by itself were up 50% to $15.9 billion, and excluding Cerner, total cloud services were up 29% to $13.6 billion, and with revenue growth acceleration in both strategic back office cloud applications, which were up 27% for the year, and cloud infrastructure services, which were up 63% for the year. Non-GAAP EPS was $5.12 in USD, up 4% in USD and up 10% in constant currency. The full year operating margin percentage was 42%. At quarter end, we had nearly $10.2 billion in cash and marketable securities, and the short-term deferred revenue balance was $9 billion, up 9%. Operating cash flow for the quarter was up 42% at $5.6 billion, while free cash flow was up 46% at $3.7 billion. Now, over the last 4 quarters, operating cash flow was $17.2 billion, up 80% from last year, as we're now seeing cash flow benefits from our cloud transformation. With capital expenditures of $8.7 billion this year, free cash flow was $8.5 billion, up from $5 billion last year, and I expect that we will see very good results in our fiscal 24 free cash flow. The remaining performance obligation, or RPO balance, is $67.9 billion, up 47% in constant currency due to strong cloud bookings as well as Cerner. I would also note that organic RPO was 15% in constant currency as a result of our customers burning through their commitments at a heightened rate. I expect that you'll see this number run up as customers reload and new customers sign up. Approximately 49% of total RPO is expected to be recognized as revenue over the next 12 months. CapEx was $1.9 billion in Q4 and $8.7 billion for fiscal year 2023 as we continue to build capacity for existing bookings and our customers' growing needs. Our investment strategy for adding capacity remains to build many, many identical cloud regions. Our starting point is smaller, which allows us to go where competitors cannot, and this continues to be an advantage for us. Given the demand we have and see in our pipeline, I've increased our CapEx projection, and I now expect the fiscal 2024 will be similar to this year's CapEx. I also expect our Gen 2 OCI business will have another excellent year of revenue growth as existing centers fill up and new centers come online. As always, we remain careful to pace our investments appropriately and in line with booking trends, which is why our gross margins are up in our cloud. We now have 42 public cloud regions around the world, with another 7 being built. 12 of these public regions interconnect with Microsoft Azure, giving customers true multi-cloud capabilities. We have many, many cloud customer implementations, 10 dedicated regions, and 9 more planned. And lastly, we have 9 national security regions live with immense demand for more. As we've said before, we're committed to returning value to our shareholders through technical innovations, strategic acquisitions, stock repurchases, prudent use of debt, and a dividend. This fiscal year, we repurchased 17 million shares for a total of $1.3 billion. In addition, we paid out dividends of $3.7 billion over the last 12 months, and the board of directors declared a quarterly dividend of 40 cents per share. Now to guidance. And as I've said before, our fundamental principle is to grow EPS while substantially increasing cloud revenue growth. Let me turn to my guidance for Q1, which I'll review on a non-GAAP basis, like everything else. If currency exchange rates remain as they are now, currency should have a 0 to 1% positive effect on total revenue and a 1 cent positive effect on EPS in Q1. However, actual currency impact may be different. Total revenues for Q1, including Cerner, are expected to grow from 7 to 9% in constant currency and are expected to grow from 8 to 10% in USD at today's exchange rate. Additional upside depends on how fast we can put out even more capacity to our customers. Total cloud revenue, again, excluding Cerner, is expected to grow from 28 to 30% in constant currency and 29 to 31 in USD. Non-GAAP EPS is expected to grow between 8 to 12% and be between $1.11 and $1.15 in constant currency. Non-GAAP EPS is expected to grow between 9 to 13% and be between $1.12 and $1.16 in USD. My EPS guidance assumes a base tax rate of 19.5. However, as you see nearly every quarter, one-time tax events could cause actual tax rates to vary. Now, before I finish, let me also give you some initial thoughts on fiscal year 2024. As I described, and Larry will elaborate in depth, we are seeing unprecedented demand for our cloud services and especially our AI services. As a result, I expect cloud revenue, excluding Cerner, will continue growing at least similar rates to what we experienced in fiscal 2023, even though our base is much bigger and may be higher. As our high growth cloud revenues are becoming a larger portion of total revenue, we are seeing an acceleration of our total revenue growth. I expect this trend will continue in fiscal 2024. And of course, we also expect to deliver a higher non-GAAP operating margin percentage this coming year as well. Okay, before I hand off to Larry, I want to take a moment to thank our customers for making fiscal year 2023 such an enormous success. You've been wonderful partners, and we thank you for your trust in us. And I want to thank our employees for being focused on advancing our customers' missions so spectacularly. Some of you are new, and many of you have been with us for years, in fact, even decades. And I think you all see that our best days are in fact ahead of us. Thank you for your loyalty and for your incredibly hard work. And thank you, Larry, our CTO, our chairman, and our founder, for leading with brilliance, determination, and vision, and allowing us to all be part of this incredible journey, which is just getting started. So thanks, Larry. And with that, I'll turn it over to you for your comments.
Thank you, Safra. The hardware and software in Oracle's Gen 2 cloud is fundamentally different than other hyperscalers' clouds. The CPUs and GPUs we rent to customers are interconnected using an ultra-high performance RDMA network, plus a dedicated set of cloud control computers that manage security and data privacy. Oracle's unique set of hardware and software building blocks enable our Gen 2 cloud to deliver much higher performance than any of our cloud competitors. And in the cloud, since you pay by the minute, if you run twice as fast, and we do, you pay half as much. What is especially interesting in today's world is that all of Oracle's cloud data centers have a high bandwidth, low latency RDMA network that is perfectly optimized for building the large-scale GPU clusters that are used to train generative large language models. NVDA themselves are doing AI development in the Oracle Gen 2 cloud. And we are partnering with NVIDIA to build the world's largest high-performance computer, an AI computer with 16,000 GPUs. The extreme high performance and related cost savings of running generative AI workloads in our Gen 2 cloud has made Oracle the #1 choice among cutting-edge AI development companies, including Mosaic ML, Adept AI, Cohere, Modal Labs, Character, Hyperreal, SliceX, Vector Space Bio, Falconry, Respeecher, Altair, InfoWorld, 12 Labs, Latent Space, plus many, many others. In the aggregate, our generative AI cloud customers have recently signed contracts to purchase more than $2 billion of capacity in Oracle's Gen 2 cloud. One last thing. In partnership with Cohere, Oracle is launching a generative AI cloud service for enterprise customers. This new service protects the privacy of our enterprise customers' training data, enabling those customers to safely use their own private data to train their own private specialized large language models. Oracle's application development teams were early adopters of this new AI cloud service. We used our own private data to improve and extend the training of existing Cohere large language models. This supplementary training resulted in 2 new specialized large language models, one for medical professionals and one for first responders. Specialized large language models will be instrumental in helping highly trained professionals use their precious time more efficiently. As I said, Cohere and Oracle are working together to make it very, very easy for enterprise customers to train their own specialized large language models while protecting the privacy of their training data. Over the next few years, lots of companies are going to train their own specialized large language models. Our partner Cohere is also using the Oracle Gen 2 Cloud for training their own large language models. In healthcare alone, specialized large language models will speed the discovery of new life-saving drugs, improve the quality of patient care, and increase access to healthcare by lowering costs. A technology revolution is dawning. Back to you, Safra.
I think we're going to take some questions. Ken?
Yes, thank you, Safra. Thank you, Larry. Lisa, if we could please prepare the audience for Q&A.
Thank you. If you would like to ask a question on the phone lines today, you can press *1 on your telephone keypad. And if you would like to remove yourself from the queue, it is *1 again. We'll take our first question from John DiFucci with Guggenheim.
Thank you. My question's first, I think it's mainly for Safra, but maybe Larry has some thoughts too. It's somewhat surprising to see the acceleration across all your cloud businesses when others, whether it's the other hyperscalers or even other cloud-based vendors, are seeing just the opposite effects in this environment today, in today's environment, and that's important. We get the better performance at a lower price. That makes a lot of sense. But at least I've been around quite a while, I guess, and usually in tough environments, we see people just freeze. But that's not what's happening here. So the question, in addition to what I just said, better performance at lower price, why? Is there anything else outside of like Oracle even that would show your cloud business accelerating when other pretty good companies are doing just the opposite.
Let me take a start at it, and Larry, you add in here. First of all, the OCI accelerate, the fact that OCI is just growing and accelerating is because customers want to spend less, and they also need to do more. They need to stay competitive. They need to stay agile. And so our technology, whether it's our applications, which allow them to spend a lot less and make better decisions running their business. So that's very, very natural. So our, Fusion, there's just so many things about Fusion that are so compelling. It costs less. It just helps them run their business. But then you go to OCI, where some of these customers are coming from our competitors. And as Larry said, Larry talked about the workload being twice as fast on OCI, but imagine it's 10 times as fast or 100 times faster, or as is common in some cases, 1,000 times faster. So imagine what that bill looks like. So we have compelling technology at a much lower price, and that's without a doubt causing our customers to move to us more quickly. I don't know, Larry, if you want to add into that.
Well, I'm just going to be a little more specific, because Safra says, I said half, what if we run twice as fast, we cost twice as much. No, we cost half as much. Half as much. We run twice as fast, we cost half as much. But sometimes we do run a lot more than twice as fast, and we cost a lot less than half as much. We announced a new database, a new version of MySQL with a fast query processor called HeatWave. And we have customers moving from Amazon Aurora, where they're experiencing 1,000 times speed up, versus Aurora. We're 1,000 times faster in query processing than Amazon's version of MySQL. It's an open source database that we added a fast query processor to. We're much, much cheaper. And that's one example. In a lot of cases, it's much more than 2 to 1. We can build GPUs that other people can't build because we have a fast network. We use this very fast RDMA network, and we started with that. In our Gen 2 cloud, we had nothing but our entire network was a super fast network, which means most of the applications, most of the things you run in the Oracle Cloud are going to be much faster than our competitors' clouds, because they don't use that kind of network. So we have huge cost advantages across a broad portfolio of applications. Let me throw in one thing. It costed one tenth to implement Fusion ERP versus SAP's new ERP system with HANA. So the costs of implementing our applications are dramatically lower than our competitors. So we have a lot of people moving from AWS to our cloud for infrastructure services, a lot of people continuing to move from SAP to Fusion. We're seeing that migration, and we're taking a lot of market share from our competitors. That's why we're doing better and they're not doing quite as well.
Okay, well, thank you, and really nice job. Thanks.
Thank you.
We'll take our next question from Brad Zelnick with Deutsche Bank.
Great. Thank you so much. And congrats on a strong finish to the year. Larry, Oracle is somewhat unique in being a leader in both infrastructure and applications. And when we look back, I don't know, maybe 5 years from now, how much of the generative AI opportunity will have been captured on the infrastructure side of your business versus within apps? And I'm not just thinking strategic back office apps. I'm thinking front office, Cerner, and all the other verticals as well.
Yeah, absolutely. It's very hard. It's very hard to answer that question. A long time ago, said the biggest strategic difference between Oracle's cloud and everyone else's cloud is actually not the RDMA network. That's a technical difference. The biggest strategic difference is that we do both. We use our infrastructure and build applications with it. So we learn a lot about how we can improve our infrastructure by building lots of applications, enterprise scale applications on top of our infrastructure. So we have this continuous feedback loop where we're building applications, obtaining insights, making improvements in our productivity. We have a new programming language. You know, we have Java, and we love Java. We use it a lot for building applications. But we have this other low-code application development tool called Apex. And we're now building a lot of our applications in Apex. And our productivity gains are, again, a factor of 10. And we build the applications in one-tenth the time, or one-tenth the amount of people, or at one-tenth the cost. But these are not typical low-code applications. These are applications that can scale to millions of users and all over the world. So most low-code applications are for small projects. We use them for application we've rolled out globally, and we've made our underlying infrastructure, the program, the Apex development environment, the underlying Apex database, which is the Oracle Autonomous Database, has made our applications developers dramatically more productive. It's one of the reasons why we bought into the idea that we could rewrite a whole suite of medical applications in a very, very short period of time, that we could redo Cerner very, very quickly because of these underlying tools. Let me close with one last thing. We use AI technology to make our database better, and it's an autonomous database. You don't need DBAs. It recovers itself. It updates itself. It adds more space. It really is a self-driving database. We've used AI technology to do that. We've used AI technology throughout our cloud, where our cloud is self-healing. We repair bugs while the cloud is running. We have an autonomous Linux operating system that's different than all of the other Linuxes. You can patch it online. It patches itself online. It repairs itself online. So again, by being in those two businesses, applications and data and underlying infrastructure, we again use our infrastructure and make it better to make our applications better, and we gain insights as what we need to do with our what we need to add to our infrastructure to make the applications better. So infrastructures make the applications better, applications make the infrastructure better. We're the only company with that continuous feedback loop. And I think it gives us a huge competitive advantage in technology. It's why we have technologies that other people don't have.
Very helpful color. Thank you, Larry.
Take our next question from Siti Panigrahi with Mizuho.
Thank you, and congrats on a great quarter. I want to dig into the application part of the business. Very impressive SaaS growth, especially in Fusion apps and cloud ERP in this macro environment. So what are you hearing from your customer in terms of migrating to the SaaS application, and what's driving that? And also the cloud world last year, you talked about the opportunity in combining horizontal application with vertical offering. So how is that helping SaaS growth?
Okay, well, I will tell you that there's no question our secret weapon is the fact that we have vertical applications also. Many of our customers end up wanting to buy a vertical application and Fusion together. And it's industry by industry. We will be posting online probably some of our wins for the quarter, but what you'll see is when we have existing customers in a segment and a vertical application in that, we truly are, without a doubt, the most popular. whether it's healthcare with all of our existing customers, whether they be Cerner customers, the fact that we have ERP and the ERP and HCM, SCM, all of our horizontal applications, CX, as well as the vertical applications, it makes us very tough to beat. And, new healthcare wins are going to be listed. Many go lives, the same in financial services, retail, hospitalities. These whole segments end up wanting to buy their entire solution from us. And that really makes us also very sensitive to their needs, and we can fill them much better. So that's been a big winner for us. And I will tell you that our customers also, when they move from on-premise, they realize that they're moving into the 21st century with a much better system, but also a much lower cost system that also is kept current every 90 days. New capabilities become available. They'll never have to do that new big implementation every 5 years like some of the older companies who say they're cloud but aren't actually cloud. They're just hosted. So our products are just so differentiated all around that we're just building momentum around the world. Go ahead.
Let me just add one example to Safra's comments, which I think are right on. And there's an interesting example. Everyone knows we compete with Workday in HCM or HR, whatever. When we bought Cerner, we decided that we were going to take our HCM system, our HR system, and specialize it, add features specifically for the healthcare industry. Now, it turns out managing a workforce in a hospital is very complex because the nurses might be have private patients at home that they're seeing. They might work for 2 or 3 different hospitals. They might do some work in clinics as well. So scheduling these people who have multiple jobs, doctors may have teaching assignments in universities. They obviously they travel and they have their own office hours. They have a private practice in addition to working at the hospital. Scheduling these professionals is very, very tricky. Recruiting the professionals is very, very tricky. Paying them, when you're working 3 days a week, 1 week, 2 days the next week, 6 days the following week, paying them can be very, very complex. So we have had a major effort in our HCM system, the Oracle Fusion HCM system, and adding all the features that hospitals need to manage their professional staff. Now, there's no way we would have done that unless we had a focus in the healthcare industry. So we not only have all the Cerner healthcare apps for hospitals, we've specialized our ERP system for hospitals. We've specialized our HCM for managing the hospital workforce. We've done a bunch of things around the healthcare industry. One of the things we want to do is, we're the largest provider of clinical trial software. But the results of the clinical trial goes to a government regulator. And we're now working with the government regulators to develop the software that allows them to take the clinical trial output in digital form and get it through the regulatory process much faster at a much lower cost. So we're looking at the entire healthcare ecosystem and trying to automate both sides of the transaction. The pharmaceutical company that's designing the drug, the hospitals that are testing the drug, and the regulators that are approving the drug should all be digitized. And we are well on our way to doing that because of our investment in Cerner. And now what has blossomed into an investment across the entire healthcare ecosystem.
That's a perfect example, Larry. Thank you both for the color.
We'll take our next question from Raimo Lenschow with Barclays.
Hey, thank you. Could I switch gear a little bit? A question for Safra. Safra, we now have Cerner in as part of Oracle. Where are we on the cost, on the synergy capture and cost takeout? And so do you see we are done there, or are we kind of still at the beginning of a journey? Thank you, and congrats from me as well.
Thank you. I actually feel like we're still at the beginning, if you want to know the truth. We wanted to stabilize the operation. We definitely didn't want to risk breaking anything. You will be seeing some more significant changes, and we have legal entity combination imminently, and that actually gives us a lot more flexibility regarding the way we operate the business. And we are just at the very beginning of it. Their margins are nowhere close to the way we run our company. And we are right at I'd say we're at the beginning-ish, sort of at the beginning of the middle at most. We've got a long way to go on just operationally, and we've got a lot of work going on the development side as we bring our technical capabilities into the product and move them into the Oracle Cloud. There are a lot of savings as we do that also.
Okay, perfect. Thank you.
Thank you.
We'll take our next question from Mark Mordler with Bernstein Research.
Thank you very much for taking my question. Congratulations on the quarter and frankly on the guidance. I'd like to get a better understanding about the underpinning of the OCI Gen 2 business. Specifically, can you give us some color on the customer concentration, industry concentration, both within the existing customer base as well as the pipeline, and how you think that's going to change over time? Thanks.
I don't know, Larry, if you want to take a stab at it. The reality is that our customers run from very small to very large. As a general matter, we're a small percentage of their IT costs when they get started, and sometimes a small percentage of their cloud spending. And as they try us out, they move larger percentages of their business off of other clouds or from on-premise. We're at the very beginning of this movement, especially on the database side, as more and more of our customers, our big customers often have cloud at customer or dedicated regions is sort of their ultimate goal for their most critical database workloads. We're at the absolute beginning of that with most of our customers. It's basically what we find is if you give us a chance, it is so much better, so much more cost effective, of course, so much more secure that customers very quickly realize how advantageous it is to move. It's all industries. You know, some of you know, auto companies are doing their simulations with us. It's across industries, across sizes. It's very, very diversified. Larry, I don't know if you have additional comments.
Yeah, I just like maybe the most interesting industry that's adopting the Oracle Cloud are people who are in the technology business. So a lot of our customers are, I mean, their business. I mean, Zoom in the early days of Oracle. You know, it wasn't long ago we were talking about Zoom and still very excited about Zoom. And they came to us, one of our earliest, very, very large customers. And a lot of their business is just running an app, if you will, an application on the cloud. And a huge amount of their expense is running that application in the cloud and doing it efficiently. And where we're most obvious, I mean, and NVIDIA is an extraordinary company, but Cohere is a great company. But a lot of their expense is running the AI training in the cloud. And when it's that much of your expense, if we're a lot faster, they do a lot of due diligence about the technology. And it became very apparent. A lot of the early adopters, if you will, and we're still in the early stages. A lot of the early adopters at scale of the Oracle Cloud were highly technical companies, like a Zoom or an NVDA, or I can name a bunch of others, or a highly technical industry like phone companies, telecommunication companies, where they see the advantages. Not only, by the way, the performance and cost advantages. Another thing that we're very proud of is because of our network, we're highly reliable, and because of the autonomy, we're highly reliable. If, for example, the Oracle Autonomous Database doesn't lose your data, because you can't make a pilot. Usually, a lot of the data loss is caused by pilot error. Well, with the Oracle Autonomous Database, there are no driver. The driver is the system. It's a self-driving database. So you can't make a human error that causes you to lose data. So it's very, where a phone company has to be up 24 hours a day, where a bank really is not supposed to lose your data, where a huge percentage of your expenses are your own cloud expenses. And you're a technology company delivering technology services from somebody else's cloud. All in those areas is where we've seen adoption of Oracle at scale. And the less technical companies are now beginning their journey of looking more closely at the Oracle Cloud. And when they do look closely, we compare it very favorably with the other clouds.
That's very helpful. I really appreciate it.
And we'll take the last question from Kirk Materne of Evercore ISI.
Thanks very much. Just a quick one for Safra, if I could. Safra, obviously a very strong free cash flow quarter. We've gotten some questions from investors wondering about the CapEx this quarter, where you saw some efficiencies, how you're able to keep CapEx, flat going into next year, given the fact that you're going to, seeing this great demand for OCI. So could you double click on that a little bit for us? Thanks.
Yeah, I mean, this past year was a big CapEx number as compared to usual, and we put out a lot of capacity. It is getting filled up and getting used up. And I think we're getting real economies. In addition, one of the things you don't realize is that our underlying infrastructure for example, I'll give you one example. Our underlying infrastructure becomes more and more efficient. Even the best example actually is under Fusion. As we've moved to OCI, we are also moving to Autonomous Database Serverless, which again gives us added capacity. So we're constantly becoming more efficient. Our original landing was 12 racks. We're moving to 10 racks to have all the services. We're just continuing to sort of miniaturize our capabilities, and it's giving us enormous efficiencies and cost savings. So staying the same as this year. Again, if it just becomes overwhelming, it may go up higher, but I think we've got it very much in hand. We've laid out a lot and this past year, and I think if we stay where we're at, we're going to be able to fit a lot more workloads within that envelope, straightforwardly.
Great, thanks, and congrats on the quarter.
Thank you.
Thank you, Safra. Thank you, Kirk. A telephonic replay of this conference call.
Okay, team, so that is it. Again, if you haven't already, we are going to be back for CPI tomorrow morning. CPI is one of the biggest days of the entire month. It will move markets. Inflation data, 8:30 tomorrow morning. Hit the notification bell, hit the subscribe button. We will be back bright and early tomorrow morning. Again, if you haven't already, check out our sponsors. Check out Top Step. It's a funded account program for futures. Great way to test your skill if you want exposure to day trading without taking the risk. Top Step is probably what you want to try. It'll just limit your risk if you're good enough to pass it. It tests your skill. They give you a demo. They test your skill. There's free trading coaches, all that good stuff there. If you want to check it out, here is the link. Great way to help support the channel. And yeah, I'll see you guys tomorrow bright and early for CPI. Good luck, guys. I'll see you guys later. It is CPI Eve, the day before CPI, and all in the market. All right, guys. I'll see you guys later.